Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the markets here. We're going to look at the S&P 500, the Dow, and Russell 2000. Everybody's wondering, is this the crash? Everybody's been looking for a crash really since the election, and it's been 14 months of straight up with very little consolidation, and now the media has a narrative to latch on to. Big drop Friday, absolutely no doubt about that. We dropped 2% in the S&P 500, a little bit over that. That is certainly noteworthy, but this is when you have to keep in mind, this is when those kind of news stations like CNBC, this is when they make their money. This is when they can put out those clickbait titles and they can get, a lot of people with fear clicking these articles and sharing them. And this is when, they see their activity. If I made this video and put a thumbnail on it with an atomic bomb going off and said markets crashing, and that was the thumbnail, I would get a lot more views than if I did a regular thumbnail and didn't have the flashy title. So it's definitely worth noting that that is what goes on in the world of the media. And also consider the fact that, CNBC, every single day they have a full slate of scheduling to fill. And most days, there's not a ton going on. I mean, you can definitely find individual stories and they do fill up space, but I have seen so many times on CNBC, so much that I had to stop watching it, where they're just filling dead air time with nothing going on, with, either making stuff up as to reasons why. I'll never forget where Ebola was the talk of multiple weeks in a row as the markets are going to crash because of Ebola. But it's just, you have to keep in mind that they are wanting, this is what they want. They would love fear, and they love when the market gets worked up and people have to be clicking articles. So keep that in mind as you're reading all these sensationalized articles over the weekend that are coming out. So to look at whether this is a crash or not, well, obviously it's a big pullback. I'm going to be looking at technicals and psychology. Psychology is going to be really important here because the technicals tell us not what's going to happen. They tell us what is most likely to happen, putting the odds in our favor. But when you're in a scenario like this, the odds of being correct with technical analysis shrink. So if you give me an equilibrium pattern and a nice standard setup that we see time and time again, I'm going to be way more comfortable and way more accurate than in a scenario like this where we are breaking out of the norm in terms of contained trading ranges. And when volatility picks up and volume picks up, that's when it gets a little bit more tricky. And again, the odds decrease in terms of being correct. All of that being said, let's go over the psychology first, then we'll go over the technicals. First, let's think about psychologically what's been happening. The last 14 months, the markets have been on absolute fire. And again, these articles are going to be putting out reasons why are we pulling back. In my opinion, the most legitimate fundamental reason that we could be pulling back is the FOMC this past week and the fact that global markets are doing so well that the market is now anticipating that the Feds are going to raise rates a little bit faster. So essentially, the economy is doing too well and that's being perceived bearish by the market because of the potential for increased rates. And the market has been loving low rates for years at this point. So that's, in my opinion, the number one fundamental reason why we're pulling back. People talk about, Trump and the memo and all that. The amount of times that we've seen this market shrug off geopolitical events or scandals or whatever in the last 14 months tells me that has nothing to do with this. So I don't buy that at all. But this is normal, healthy consolidation at this point. It's just happening very fast. So psychologically, what's happening? The bulls have been in control for 14 months. Every single pullback has been met with a V-shaped recovery, of bulls buying the dip hand over fist. That is what we're going to be looking for to happen until it doesn't happen. So the trend, time and time again, this has played out over and over. And we'll look back at some examples just in the past couple of, the past year or so where that has been the case. So in my opinion, if this is, the top of the market for a while, if we're going to see weekly consolidation or months of consolidation, what it's going to take for that to happen, in my opinion, is a bounce, because psychologically smart money is going to be buying this dip early next week, in my opinion, whether that's Monday or Tuesday. I'm not going to try and guess, but I do think it's going to be early next week. We see smart money buying the dip, and I call it smart money because that has been the trend, and that is what they've been doing all year, or all of the past year. So In my opinion, if it's going to be a significant pullback or if it's going to be a red flag, we're going to see a bounce, a lower high, and then a dump. And that dump breaking to a lower low is going to say, uh-oh, that was not smart money. We are not done, and this is a pullback. So almost a little bit of a fake out. So I am anticipating bulls buying the dip. We did close at the low of the day, so that doesn't suggest that we could see some further downside to start the week. But like I said, I'm going to be looking for bulls to buy the dip. I'm going to be looking for a decent recovery, and it will be a lower high and a lower low that then tells me, okay, the daily trend is shifting. We are now seeing lower highs and lower lows. And then even after that plays out, I'm going to be looking for that on the weekly chart. This weekly chart has not consolidated or changed the trend in a very long time. So if this weekly chart pulls back for a couple weeks, then we see a bounce for a couple weeks, a lower high, and then a lower low. That will be a change in trend on the weekly chart, and that has not happened since the election. So again, need a little bit of a bounce of smart money coming in to buy the dip as usual. It's going to be business as usual for the people that have been buying this dip, and it's going to be them being proven wrong that will indicate that this market has significant more downside potentially coming, and maybe it is the top, and maybe we are overinflated and in bubble territory. You also have to think about the psychology of what's going on with earnings. We've had the tech sector as the largest holding in the S&P 500, and it's been on absolute fire for 14 months since the election. Now we just had all of our major players come out with their earnings reports, Apple, Netflix, Facebook, Amazon, Google, and we are now seeing the market say, okay, well, our short-term catalysts are gone for now from the tech sector. We're going to take some profit, and that happened to the tune of over 2% on Friday. And now we're going to see, is this money going to either go back into tech and buy the dip or go into other sectors and see some sector rotation, or is money going to be leaving the market and we're going to be seeing that lower high, lower low scenario? So I am looking for bulls to buy the dip. I'll show you why in the short term in terms of early this coming week. We'll look at that in just a moment. But let's go over the daily. Again, this pullback is coming straight from the all-time high. We don't have any little choppy action and then dump with the bears proving themselves. This is just a straight-up pullback. And looking back at previous dumps, and I just looked at one from, I believe, 1986 or 1987, before I was even born, but it was on the chart. It was exactly what I just talked about. It was a little bit of a dump. It was a lower high and then an all-out big-time dump. And it came after that bounce attempt was rejected and failed. So that's, again, what I'm going to be looking for. So here we are pulling back. I'm looking at support on the S&P 500 and going to be looking down at this last consolidation low, 2,736. I'm going to round here from the pennies, and we'll see if the bulls can hold that level. We lost the middle Bollinger Band, and you can see how few periods of consolidation and bases of support to be looking at. So we had, even just on Friday, we had one here, a consolidation low, and these are just very brief 1 day of consolidation establishing support. This is the strongest support on this daily chart that's coming up because it took 8 days to establish this base of support before continuation, where every other support level established in 2018 was just 1 day because of the lack of consolidation this previous year, just this last month. So bears in full control, close at the low. We're looking for a bit more downside, but we're looking for the bulls to buy the dip. Why are we looking for the bulls to buy the dip? The hourly RSI levels. So here is not the chart I was looking for. Here we go. This is SPY on the hourly time frame, and SPY is, of course, the measurement of the S&P 500. So here it is on the hourly time frame, and these white here is extended hours, so after hours pre-market, and then after hours Friday. So look at the hourly RSI. Here we are down under 20. We're down with an hourly RSI of 16, and let's scroll back and look at historically what happens when the RSI is down at these levels. And we can see that it does not happen often, or it has not happened often in the past few months. This is now going back to October, but I can see this is the lowest the RSI has been in quite some time because we are down under 20. We have bounced off of 20 in the most recent past, but look, it does dip below 20 here. So let's scroll back and say historically all the way back to March now. This is going 11 months. We have dipped below a couple times below 20, and the bulls buy that dip very quickly, and we see V-shaped recovery. So let's look back here. RSI, this is back in August, mid-August 2017. The hourly RSI on SPY here dropped all the way down to just about single digits. It got down to 9. So then we saw a V-shaped recovery and multiple days of recovery from there. The RSI went all the way down from single digits and all the way back up to the upper 70s very quickly. So that's an example to be looking at. Let's look at the 4 hours so we can scroll back more significantly, we can see the 4-hour RSI right now on SPY is down at, let's see here, we're down in the low 30s. And actually, I take that back. We're down at 23. So scrolling back, looking historically, 4-hour RSI, there have been times where it dips under 20, but it is very short-lived before the bulls buy that dip. Again, this is a dip from back in August, and we are seeing very brief periods under there. So again, that's why I think that early this coming week, the bulls are going to buy this initial dip. It's going to be the smart money that's buying the dip the entire last 14 months because it's been continuing to work and they have no reason not to be buying the dip. And it will require a lower high and a lower low on the daily dump to get this party really going for the bears. So here on the weekly time frame, this trend is not changing anytime soon for the S&P 500. And again, it's the lack of consolidation established on the way up. The last consolidation that I'm looking at, to 2673 and then down to 2557. The middle Bollinger Band hasn't even been in the picture for about the last 5+ months, and we did bounce off of it the last time we tested it in our most significant weekly consolidation that we saw there were 2 periods here in 2017, but they bounced off the middle Bollinger Band. It bounced off the middle Bollinger Band and kept it as support. So we could pull back another, 100 points here in the S&P 500 and before we even count to that weekly support. So absolutely, it's a big pullback. We haven't consolidated in a month. We haven't seen significant consolidation in 5 months. And there are no major red flags at this point other than the fact that we're pulling back very quickly. And we'll see if the bulls buy the dip to start this next week. INDU. So the Dow here is seeing the same thing. Again, it's coming right from the all-time high, very brief sideways consolidation, and then a dump and continuation. We have a lack of support established due to the strong move we've seen in 2018, and we haven't even given back, or we have given back just about half of the gains of 2018. So we're looking down at the next support level, 25,257, and then another one down here at 24,708. Those are the 2 support levels that I'm watching from here. Again, the weekly chart, the last consolidation base of support as far as the weekly chart goes is that 27 level, or 24.7, I should say. 24,700 and just roughly rounding, but that's what we're looking at. Anything above that level is a higher low. So there was a lot of bear volume. There's a lot of bear momentum heading into next week, but there will be people to buy this dip and to buy this fear the first go around, in my opinion. IWM, Russell 2000, or Russell, it's pulling back, taking out. We did establish more support on IWM here than in these other markets. I'm looking down at the next couple of support levels of 152.39 and then down to 149.07. Same thing. We look at the weekly time frame, and I would say anything above this consolidation low of 149.07 is a higher low on the weekly. We're still above the middle Bollinger Band, haven't even tested that. So that's where we stand, and that's my opinion. Absolutely big time pullback. Bears had a wonderful week. They had a great end of the week. VIX players saw some really nice gains. We closed at the low of the day, so bear momentum is going into next week. We could absolutely pull back and see red on Monday, but the more oversold that 4-hour and hourly RSI gets on SPY, the more likely we're going to see a pretty significant short-term bounce at least to start it off from there. And then once we have that temporary bottom established in these markets, that will be a key benchmark gauge of strength to be looking at. And once that level is broken, then we know, okay, this is a more serious pullback. It is going to be a bit more prolonged, and we're not going to see the bulls come and save the V-shaped recovery like we've seen time and time again. So it's going to be very fascinating to play out. Again, protect yourself, protect your positions. Stop losses are great. Hedging is great with some puts or some shorts, or trading some VIX, grabbing some during this times of volatility. But again, at this point, those things have already played out. That should have been more of a game plan for Friday or even Thursday. So we'll see if the bulls buy this dip, and we'll continue to check back in. I hope you have a good rest of your weekend. And remember, no fear, no euphoria, trade like a robot.